Welcome to 30 Minutes to Wealth,
the show that teaches you how to build wealth through real estate.
Our company, ProFunds Mortgages, has assisted real estate investors in achieving wealth for over 2 decades.
Over the next 30 minutes, we're going to share some of our key strategies in real estate with you.
Right here on 30 Minutes to Wealth.
Hi, I'm Carmen and this is Jordan. Welcome to 30 Minutes to Wealth. I would like to also say we have a special guest here on our show.
It is so exciting to be here on your show.
This is a new show.
This is a new show. And you know what, I have to confess, I could be tempted to feel a little bit insecure because, you know, on the Everyday Investor, I have the best of the best, of which the two of you are, and you come on my show all the time, and therefore I can say it's the #1 show on TV.
Aha.
Now, Scott McGilvery, he says to me, well, Rav, maybe it's the second best show. Income Property might be the best show on TV.
That's right.
But now I think
There's
the
another
girls
one in the mix.
We're going to make a run for your money here.
the best show. No, you don't. Hey, listen, I'll admit it right now. I mean, I've seen you guys rehearsing, your setup here. What a beautiful studio.
Awesome.
This is
Thank
probably
you.
going to be the best show on TV. Congratulations.
Thank you
Thanks,
very
Rav.
much.
So what is it? What is, you know, just a quick snippet. What is 30 Minutes to Wealth? What are you trying to create? Because I know it's more than just mortgages, correct?
Yes. So it's basically a show. So 30 Minutes to Wealth. We're bringing on experts in all facets of the real estate industry, and we're showing others how they can build wealth through these different types of real estate investment vehicles, so that they can, you know, have more time for the things that they want to in their life.
Yeah.
What's our tagline?
The show that teaches you how to build wealth through real estate.
Fantastic.
There you go. So
And,
yeah,
you know,
Yeah.
it's not just going to be mortgage lending, which everyone knows us for, or getting you a mortgage. It's going to be about flipping a property, how to do it,
Real estate
creating wealth in
acquisition.
real estate.
And honestly, I'm so happy for you because, you know, Carmen, you help so many people with their mortgages personally. You guys help people invest through mortgages. But it's about time you have a real estate investment show. I mean, you've only been doing this for as young as you look and as beautiful as you look. You know, a couple decades, a little bit more. You've been buying properties all over the world. And so it's about time you start teaching people how to do that as well.
No, I'm really passionate about it. I love it. So it's not a job for me.
Yeah.
I see a deal. I love it. So we'll be back shortly with more really juicy information.
So excited.
Let's just say it's like a big joint venture of buying real estate. So everybody gets to participate in investing in it,
Yeah.
and they get to own, we call them units, but you're essentially owning a piece of everything that we are putting into it.
Hi, I'm Jordan. This is Carmen. We're here with our guest, Rav. Welcome back to 30 Minutes to Wealth. Rav, before we kind of get started into a little bit more about the show, tell us a little bit about your background with real estate.
Are you guys sisters?
I love you.
Huh?
You are great.
You know, Jordan, I not because I was a bad boy at all. I just get bored really easy and things have to make sense. And so I got kicked out of like 4 high schools in little old Kingston, Ontario. And there was something that was called co-op. And so just to get me out of classes, I co-opted the largest real estate brokerage in that small town of 60,000 people in Kingston. Wow. And it was a very large real estate brokerage, and they would take me out and, you know, show me things and so on and so forth. So I am now 46 years old. So 30 years ago, I got my taste of real estate and never looked back. Me and Mom bought a little townhouse there and
Didn't know
started
that.
renting.
Yeah, I didn't know that
and,
either.
Yeah, so, you know, but enough about me. Who cares? What about this show, 30 Minutes to Wealth? And so this is not just a mortgage investment show. I mean, you guys are into a lot of things now. You're into commercial development, residential development.
Yes.
I think you're even doing a real estate investment trust, right? You
Yes.
just launched a REIT?
Yeah, District Property Trust.
District Property Trust, and that's under the ProFunds family?
We actually launched the REIT, and I'll just quickly get into that, but we launched the REIT because it was a great exit for all of our development projects that we were entering into. So our investors knew there was an exit.
Yeah.
So it was just like absolutely perfect.
So how to explain that for you know, the viewers a little bit? What is that? Look at me, I'm interviewing already. I can't help it.
Love it.
What is a REIT? So like what is it?
Let's just say it's like a big joint venture of buying real estate. So everybody gets to participate in investing in it.
Yeah.
And they get to own, we call them units. but you're essentially owning a piece of everything that we are putting into it.
Okay, so instead of me investing in like one unit,
Yes.
one house, one semi, one townhouse, whatever the case is, I now own a piece of all real estate,
Portfolio
the
of
whole
income
portfolio.
producing real estate assets.
Income producing.
You will benefit from the upside in the real estate.
Yeah.
Okay, so if we're buying something today, the whole group of us will benefit by the increase in value appreciation, decreasing, paying down the mortgage, the cash flow, all of that. And if there's anything in there that we're buying, which we are, great assets that are going to have huge upside, it's all the benefit of the unit holders and the REIT owners.
Okay.
So we do, in our company, we do a lot of mortgages, and we do group mortgages for construction and development. So a lot of the projects that we are doing are actually income producing properties. So we're building them so that we can sell them to the REIT. And this way here, everyone has a planned out exit.
That's amazing. So I can put my money in because you're not just acquiring properties in this REIT, you guys are also developing properties in this REIT. I don't think I've ever met someone who's doing that.
The great part is that there's different facets of our company. We have the development company, we have the private mortgage lending division, and now that we've launched the REIT, it gives further security to our investors that go into a development mortgage, and they know there's already a deemed disposition, that it's already sold to the REIT.
You use such big words with me. Deemed disposition. What does it mean? What do you mean by that?
What I mean
Planned
is
exit strategy.
Planned exit strategy. Yeah. So what?
the exit is sold.
Okay. So you're building something.
Yes.
Rav wants to put his, $100,000 there.
Yes.
Okay. By way of mortgage.
Yes.
With a bunch of other people. That's called a group mortgage, syndicate mortgage. That's what you guys, right?
Yep.
Okay. So we're going to do that. Once that's done, I'm out. I've got my money. Or because it's you own that in your REIT. I can be part of that as well now and own a portion
So it's
of
not
what we
owned
built.
by the REIT.
Okay.
So it's not owned by the REIT yet. The REIT is going to purchase that building.
Yeah.
Once it's completed.
And then
Yep.
once it's complete,
Sure.
so we have an agreement of purchase and sale in play already
Yeah.
with the REIT. So when the building is complete, it's sold.
Yes.
We don't have to wait for absorption rates, which means people, general public buying units.
Yeah.
We have the whole building sold as an income producing
Brilliant.
property to the REIT. So
Yeah.
now we have this beautiful product in the REIT, which you can't
Yeah,
buy.
which is also so great for the individuals coming in and investing in
It's
that
perfect.
REIT because
I'm
they've
still-
got brand new assets in there.
Let's go conservative and let's say 8%. Okay? So let's say I'm making 8% on my $100,000 very conservatively, right? I did it in the beginning by way of mortgage.
Yeah.
And now I'm doing it, I don't do anything really, I mean a little bit of paperwork perhaps, and now I'm doing it forever by way of REIT.
Yes.
And I still keep my conservative 8%
Yeah,
or whatever
and,
the case
and
is.
just think, real estate just keeps going up.
Yeah.
The amount of people coming into our country, immigrants, 300,000-400,000 a year.
So that's the other good thing about a REIT is I do get my income, my cash flow, but
Your
it
capital
also is going
appreciation
up
as
in
well.
value,
Value
as well.
going up.
You guys aren't just pretty faces, huh?
No.
Very smart.
And the mortgage is also being paid off.
And the mortgage is getting
right?
paid
So
down.
we're just creating value for everybody. So if they stick into the whole thing and stay with it, they're going to create so much wealth.
It's fantastic.
Yeah, so it's amazing.
But let's talk about mortgages for a second. That people out there don't know that they can be the bank, that they can lend money, get a return like the bank gets a return.
You're secured on real
and you're
estate.
secured on the real estate.
Yeah.
So long as we're not going, 99% loan to value. Explain to me what loan to value means again. Yeah.
We'll let Jordan do it. She's the
Yeah,
guru here on
loan to
that.
value is basically the percentage of debt that's registered on the property in
Yeah.
comparison to the value of that.
So as an investor, Jordan, or let me just say for you personally, because I know you invest in deals as well, what are you comfortable with? Is it 90%, 80%, 75%? What would you say?
There's a lot of factors that goes into that. So
Okay.
we have a whole team at the office that will do the evaluation on these new mortgages when they come into play. So we look at a really broad range of factors. We look at the borrower themselves, what's their capacity. We look at the location of the property. We look at what's the exit strategy. What are the funds used for? What's the loan to value? So all of those will kind of come into play, which would allow us to feel comfortable with a certain
And to make a
range.
decision.
Definitely, we want to make sure that the property's not over leveraged.
Yeah.
So we typically would go anywhere from 90% and and downward.
Yeah.
Obviously, the lower the loan to value, the better it is from a risk standpoint.
Yeah.
So
and then
it kinda
also,
depends.
and
It's
also
a
your
case by
returns,
case.
which is not a bad thing, but your return on your investment would be lower as well, right? I mean, that's just
Right.
like anything in life. The more, and I don't like to use the word risk, but the more perhaps it's leverage, or the more I'm going to be able to make on it. But I can also take a very conservative route as well and go an 80% loan to value and still make 8, 9, 10%, depends on the deal.
And you know what? We may have first mortgages at that. We may have second mortgages come in that have 50% loan to value. So it's really, and
It's
that's
so
an
different.
amazing position to be in. Even though you're going into second priority, you've got 50% buffer of equity in that real estate. So every deal is so unique, and
Yeah.
that's why it kind of takes an eye to go in and evaluate on a case-by-case basis which you're comfortable
And
with.
even at a 90% loan to value, there might be a reason why we're doing that.
Yeah.
And
There may be
obviously
a-
we
There's
don't
always a
want risk.
backstory. Yep.
Yeah.
Yeah, like maybe their credit is phenomenal and they have a huge net worth and they make a lot of money.
And we have a really good exit, or there's going to be value creation happening throughout that duration of the mortgage. And
Yeah.
as the mortgage progresses, that loan to value is going to get lower and lower. So in that case, we would be comfortable with it.
Yeah, and what I also appreciate about you guys is the show's called 30 Minutes to Wealth, right? But people don't really understand, and I want them to understand that we're not just speaking about monetary wealth, and that's not even the most important thing to you guys. I mean, I know you. I know how much you guys value family. I know how much you value faith.
Yeah, we
I
do.
know how much you value friendship, and thank you for being mine. So, just talk a little bit about the concept of 30 Minutes to Wealth. The logo's amazing, the studio. Talk a little bit about the birth of this show.
Well, there's not enough information out there in our industry about real estate. There is, you'd have to pay for courses to get involved, which I totally recommend. I think that's great. But there's so much going on in our industry, and there's so much more to offer, and people really don't understand all of that. So what we want to do is just paint a picture. How do you do this? How do you do this? And let's move forward on. There's so much wealth to be created in real estate, legitimately.
Who came up with the name?
That's a funny story.
What'd you do?
We sent it out to our entire database. We had a contest.
Oh, okay.
And basically we said, whoever wins
Yeah,
will receive an iPhone 8
yeah.
or an iPad. But we'll finish after the message, and I'll tell you how we got the name, because it's very interesting.
Fantastic.
We'll be right back.
If you'd like more information about investing in real estate or have any questions or comments, check us out online at profunds.ca.
While you're there, be sure to view our other episodes filled with great real estate knowledge.
So if you're finding income properties and you want to buy it, but maybe a lot of your money is tied up in your home and you can't have access to it, what we can do is structure deals where no money down.
Hi, I'm Jordan. This is Carmen, and we're here with our guest Rav. Welcome back to 30 Minutes to Wealth.
We were talking about how
We came
How you came up with the name,
How the
the
name
logo, the everything.
Yeah. Well, the logo we worked on that together.
Okay. It's wonderful.
But we did have that contest, and we sent it out to our entire database.
Which is not 10 people.
No, and we
Thousands of
had
people.
huge response, huge. And so many people were so excited to know about the show coming.
Yeah.
And they provided us with all the comments on what they want to hear, what they want to learn.
So hopefully we can incorporate that into
Which we will.
all of our upcoming episodes,
That's
which
a
is
great
also
idea.
great. Yeah.
Yeah. So the story is Jordan's dad, my ex, picked the name.
Within 2 minutes, I said, "Okay, Dad, we're looking for a name. What do you think?" And he just goes, 30 Minutes to Wealth, just like that. And I'm like, "No way." Anyways, we listed this whole thing. We did
loved it.
everything by the book, and we had people vote on it. The whole company voted, and that one was the name that stuck. So him and his.
I love it because I know who you are. If you said, 30 minutes to riches or to cash or to money, but no, because wealth I know is not just about money for you guys.
Right on. That's exactly it. It was perfect.
Yeah.
The name was perfect. As soon as I heard it, I went, that's it.
So what is your why? What excites you about this business that you're in?
Well, we love helping people, genuinely.
Yeah.
I love seeing that people can actually change their lives in a way, and it could be many different ways. Maybe it's helping, and I'm just going based on pure experience of my clients. Like,
yeah, we've seen so many people that have come to us after maybe a couple of years of investing, and they're so grateful, and we've seen changes. You know, a couple of our clients, she quit her job and she's retired now, or they've sold off real estate and they've invested and they're just living off of that income. So we've really seen people that this has benefited, and you know, we want to expand that to more people to show them how they can improve their own lives. And it's not just about necessarily making more money, but allowing those people to have more time for their important things in their life, you know, their family, their friends, their free time.
there's many things that this enables people to do. If you have a little bit of that freedom, financial freedom, and knowing that you have someone that's really there, genuinely looking after your best interest to make sure that you're going in the right place, because we're so focused in on that.
Talk a little bit about active investments versus passive investments. I mean, I think that's the beauty of your outfit is it's just so
There's so many
passive,
different
you know? But
avenues,
explain a little bit about what that means, because I think, you know, Jordan, when people think about real estate investing, they think, oh no,
Only
the
the active
headaches,
side,
the nightmares, maybe get the hard hat out, the
And you know
construction
what, we
boots.
hope to talk a little bit
Fixing
about
toilets.
that too on the show, is, you know, different avenues for active investments that can be really lucrative, and tips and, you know, from experts in the industry. But another whole side of it that a lot of people aren't aware of is this passive side. So, you know, the mortgage investing, the real estate investment trusts, where, you know, you can still do your full-time job, you can still do all the regular things in your day, and it's just you're still investing in real estate. You're not directly involved from a management perspective, needing to, you know, make sure everything's running on your own. So you're just essentially investing your funds into different investment vehicles that just make money for you.
An investment amount, just do I write a check, or do I have to go to the bank, get cash? Do I wire it?
And that's pretty
all
much
there
the
is.
gist
That's all I have
of
to
it.
think about.
Yeah.
And
no,
then having your funds deposited into your bank account monthly,
That's right.
right?
Yeah.
But we also want to talk about the active real estate
So
investment.
tell me about how I can get involved actively. What does that mean?
Well, I'm so passionate about real estate, as I've mentioned already many times.
She's a very active real estate investor.
Yes, I am. So I'm active and passive.
Yeah.
But the active, really, I love it, so I love doing it.
Yeah.
And what we're going to be able to do is help people acquire their properties, regardless of what institutionally is happening out there, because banks have restricted so many things. Their lending criteria has changed. It's changing all the time. Now they're raising interest rates to qualify on a mortgage. They're making it tougher and tougher, which is opening the doors for private money. And private money can go into good, solid deals.
Yeah.
So if you're finding income properties and you want to buy it, but maybe a lot of your money is tied up in your home and you can't have access to it, what we can do is structure deals where no money down.
So what? Yeah. So what you're saying is, if I've got $100,000, I can lend it out through a private mortgage, through a group mortgage. I can put it in our REIT. I can enjoy 8 to 12%, maybe even a little more. If I want to go and buy the ugliest house on the street and renovate it, maybe flip it, maybe hold it, maybe rent it out, but I don't have the funds to do that, I can come to ProFunds and I can borrow $100,000, $200,000
Exactly.
short-term money, because there's another RAV out there that will lend that to me. Right?
Exactly.
And so that's what you're talking about when it comes to active investments. People want to, they have time on their hands, they enjoy it, it's therapeutic.
There's so many reasons why people would borrow money like that.
Yeah.
You know, and that's why lending it's a good venue for earning a great return and knowing that it's safe and secure. But we're also going to be having guests on the show that are going to speak about the tax benefits. How does it work? We're going to have some CAs come in and speak about that. Very high level people.
Lawyers on, you know, legal structuring, on how mortgage closings work.
Developers.
And then are you going to have developers? Are you going to have people that have borrowed money and done what we're talking about?
Yeah,
are you going to
exactly.
have people on the show that have lent money and sharing kind of
Yeah.
their returns and their exit? You're doing the whole thing?
We're doing the whole enchilada.
Okay.
So no matter what your niche is, you can kind of come in and learn from experts in that realm and try
Fantastic.
to bring it into your own life.
You know, so I honestly, I think it's fantastic that you're doing this. And, you know, like, was this always the plan for the both of you to host this?
I always thought that it would be such a great dynamic because Jordan works in the company.
Yes.
She has seen and
Grew up
witnessed
with
me
it, yeah.
doing what I'm doing, and now she's very involved in the company. She's the vice president of investor relations. So what she does is she handles all the capital raises and the deals that go out. So she's super careful on making sure that what we're putting out there is what it's supposed to be and it's safe. and she runs that whole department. And I think it's such a great dynamic that we have mother-daughter.
It's amazing.
Right?
I think, again,
Yeah.
we do this for, purposes of family. We do this, we create wealth so that we can have more time to be with one another. I mean, you guys
And
do
we're
this
so
together.
close. I mean, we work together when we're not working together. We're hanging out. We're always
really
yeah,
close.
we're very close.
Really,
so.
really close.
Very cool, very cool. And ProFunds is, it's growing, right? I mean, what's the outfit now? 30, 40, 50 people? I mean, how many?
Yeah,
how many,
we've got more.
Yeah, we've been, the company's
growing
grown. Well,
at quite
there's many
Different
subsidiaries,
divisions,
right? We have
Valor
Valor,
Capital, yeah,
Valor
Capital.
Capital. We have Valor Mortgage Services, which is a mortgage administrator. Valor Capital, the development side.
They do all of the analysis and due diligence behind the development projects that ProFunds will finance. So it's
Yeah.
a really good blending of the two.
Are you going to have a show on that? Due diligence?
Yes,
yeah?
we are.
Yes.
Okay.
Yeah.
Cool.
Just so people know what's behind the scenes when you're getting into
Yeah,
these deals. So yeah, there's Valor, and now there's District coming aboard,
That's the REIT.
the REIT,
Yeah.
and
And we've got the Valor Management side, which provides all the
Property
project management and monitoring services to our development. So
And you
there's
know
a lot of different divisions.
And you know what's fun about that is if I'm going to invest, $100,000, if I want to know about all the behind the scenes, I can. And if I don't want to know, which many people don't want to know, I don't need to. Just, hey, here, show me the deal. Yeah, it looks good. And I was referred to you by so and so, because there's many investors now that you have that are, you've been doing this for a while now.
Yeah.
Right?
Yeah.
You
Yeah.
started by lending here and there, and now you're ProFunds. ProFunds.ca.
I love it.
Yeah, no,
Yeah, it's exciting.
That's fantastic.
And we want to continue to be able to offer great, sincere, genuine service to our clients.
Yeah.
And it's going really well. So we're
Well,
very
listen.
fortunate.
Congratulations on your show.
Thank you.
I feel so used to my normal close by saying thank
Come
you for
on,
being on my show.
you have
and
to
so on and so
say
forth.
your ending. You
Yeah,
have to. Come on.
Carmen and Jordan, it's been great having you on the show. If you want more information on this show, 30 Minutes to Wealth, make sure you go to profunds.ca. There you'll find everything you need to know about real estate investing. Honey, I love you. I'll be home soon. Ciao, everyone.